Everyone, and welcome back to another video for today. So Intel just reported earnings call is also done. So let's go over everything you need to know if you are still an Intel shareholder. Quick disclaimer, I don't own any shares or options anymore of Intel. I used to own shares, used to own call options as well. Those worked out extremely well. And going into this earnings report, I was thinking about maybe just buying the shares. But after hearing what I heard and seeing what I saw for this quarter, I felt like I have time. I have time to see how things evolve because yes, we've had, of course, a huge run up in the last couple of weeks, actually last couple of months. Huge run up. Year to date, stock is up 100%, believe it or not. And so right now, I feel like I have time to see how things evolve with Intel. This quarter was, of course, as expected, much better than what everybody was thinking, right? The bar was extremely low for Q3, of course, with the NVIDIA investments, with the US government investment, with the SoftBank investment, the balance sheet is looking much, much better for Intel. This was one of the priorities of Lip-Bu when he took the job. But then going forward, there still is, of course, a long way to go. The reason why Intel at $20 or so was, for me, sort of a no-brainer for an option play is because, well, at $20, $19, Intel was priced as if it was going bankrupt, and that was not going to happen. Intel right now, $175 billion or so, right? $40 per share. Stock is up around 7% after hours. Now we're talking. Now we're in an area where, okay, the business is definitely not as competitive as it was 10 years ago. It's definitely not as competitive as an AMD, definitely not as an NVIDIA, but at least it is showing signs of life. At least the roadmap looks exciting, right? We're talking about 18A, for example. 18A during the earnings call was asked about the yields. Of course, they said that right now they are fine with the yields at the current moment, but of course the goal is to keep improving that. So I'm pretty sure that they're not that happy with the current yields for 18A and that they want to see it improve, of course, throughout 2026. As for 14A, they said that the engagements around that were quite good as well. There were some questions with regards to NVIDIA, right? The big NVIDIA investment and partnership as well. It's not something that will cannibalize their current business, is just adding on top of the current business, which means their total addressable market, or if you want to call it serviceable market, is expanding thanks to that NVIDIA partnership. And from what I understood, this is just the start. They were asked some questions about the potential of doing something extra with NVIDIA. We didn't really get that much information, but it seems like something might be in the works. And then again, we'll see what that means. And then maybe, yes, you will see the stock move on the way up because it might be another billion-dollar opportunity for this company. But enough of me talking. Let's actually look at the numbers. If you enjoy this type of videos, hit all the buttons. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/coachinvestor. Thank you very much. All right. So first up, the summary here, fourth consecutive quarter of solid results. So revenue, gross margins, EPS above expectations with demand outpacing supply. Meaningful progress on the balance sheet. So the US government, NVIDIA and SoftBank Group monetized Altera as well. And Mobileye, all of that strengthened the balance sheet. AI driving demand for compute. Core x86, US-based foundry position Intel to capitalize over time. And so the results for the quarter, again, like I said during the live streams and during other videos, I think the guidance that they gave us was just putting the bar extremely low. So revenue, $13.7 billion, up 2.8% year over year, and $600 million above the July outlook. Gross margin, 40%, up 22 percentage points year over year, 4 percentage points above the July outlook. They also told us here that these are non-GAAP results. GAAP gross margin was 38.2%, up 23.2 percentage points year over year. And EPS, of course, a huge beat there. EPS of 23 cents, up 69 cents year over year, and 23 cents above the July outlook. Here as well, GAAP EPS would have been 90 cents, up $4.78 year over year. Of course, we've had huge restructurings with Intel. Now, this is basically what we're getting right now. We're finally back above $1 billion here in operating income for the quarter, $1.5 billion to be more specific. Then if we look at the two big segments here, we're also going to look at Intel Foundry. We got the CCG segment, $8.5 billion, 31.6% operating margin here, so $2.7 billion in operating income. The PC total addressable market was above expectation, driven by refresh, Windows 11, and AI PC. So definitely a good quarter here. Q4, holiday season and all of that should be a strong quarter. Should be. DCAI, $4.1 billion, 23.4% margin, and $1 billion in operating income. AI fueled demand for Xeon as industry refreshes traditional infrastructure here as well. You can clearly see that the line here for operating margin goes up and to the right. Now, one of Intel's, of course, huge assets is Intel Foundry. Now, Intel Foundry, as you can clearly see, revenue-wise, we're not going above $5 billion right now. It's a $17 billion business or so on a yearly basis, but of course, it is still losing quite a lot of money. Now, the expectation of this business is, of course, first of all, it's a long-term plan here. It's a long-term game with 18A, 14A, maybe, of course, bigger mix of newer nodes for Intel. All of the newer nodes are going to have better margins and are going to become more and more profitable, which means that over time, Intel Foundry is not going to have negative operating margins or operating losses. Also remember, startup costs are not going to happen each and every year. So the huge startup costs that are worth billions of dollars, it won't happen at the scale that we've seen before, right? Because 18A, they plan to use that node for many years. It's something that we've seen also with TSMC, for example. They're still making quite a lot of money from the older nodes, but the newer nodes are, of course, higher margin nodes, and the newer nodes take up the majority of the total revenue that the company generates. With Intel, and it's going to take some time until 18A ramps up completely, takes a lot of share of the Intel Foundry, then eventually 14A as well. Margin on those are much higher, and that will lead to Intel Foundry generate more revenue and becoming more and more profitable, but it won't happen overnight. And then as for the rest, close to $1 billion, $993 million, 10.1% operating margin, and $100 million in operating income. Mobileye continues to outperform expectations, and Altera's stake sale is closed. As for the outlook, they expect revenue between $12.8 to $13.8 billion. So here again, $1 billion range. That's down $1 billion year over year. Gross margin 36.5%. That will be down if that comes in line. 5.6 percentage points year over year, and EPS of 8 cents, down 5 cents year over year. And so if we look at each of the big segments and look at the trend of what's happened over the last couple of years, of course, we know the business basically peaked back here 2020, 2021 for the client computing group, and then it completely got destroyed, bottomed here April 2023. Since then, it has gone up and then has plateaued around $7.58 billion or so. For this quarter, we've had a strong quarter. As for the other segment, the data center and AI segment, for example, this is this. Of course, Intel clearly does not participate in this whole AI revolution just yet, right? Here as well, back in 2021, this was generating $6.4 billion in just one quarter. Then we bottomed here at $2.9 billion. April 2023, and now we've been around $4 billion for quite a while. As for the Intel Foundry business, the revenue there, as we've just seen, has been around the same for a while as well. But this is a huge, I would say, this in itself would be a call option when buying Intel. Of course, right now at $175 billion or so, maybe less of a call option, but still, the upside with Intel Foundry is quite immense because it is only generating $4.2 billion as of today. Think about what an Intel Foundry will be doing or could be doing in 2030, in the 2030s. Do you still think that it will generate only $4.2 billion in revenue? I don't think so. I think they mentioned a huge multiple during the earnings call. Unfortunately, I don't have the transcript, but the potential with Intel Foundry is immense. I'm not saying it's going to be a TSMC, but even if it is 50% of TSMC, right? 50% is quite conservative in my opinion. This is a huge business in the making. This alone is worth hundreds of billions of dollars. Of course, with Intel, execution is key. There's definitely a change in culture right now. Now, I do want to say one thing, that we need to still give a lot of props to Pat for turning Intel around. A lot of people forget, but without Pat, I don't think that Intel would be in this place right now. Of course, Lip-Bu came in and he really has that killer management style. And he is, in my opinion, now the right captain to really steer this huge ship in the right direction. And so right now, Intel above $40 for the first time in, well, a long time. Actually, for the first time since April 2024, Intel is back at above $40. I think the US government has almost doubled its investment. So congratulations. Right now, $40. It's going to be probably overbought on Friday, but I do see this being now a stock that stays in a range for quite a while, unless of course we've got more deals coming in, more investment in the business, maybe strategic investments in Intel Foundry, right? Maybe a Microsoft comes in, or an Amazon comes in, or who knows, more Nvidia news. But the most important thing here is that Intel is now turned around and is heading in the right direction. It's not heading towards an iceberg anymore. I think they did everything they had to do to really not be the Titanic. And so right now, I do think that Intel is in the right spot. Execution is key. Don't expect it to become $1 trillion company or $500 billion company overnight. But you have here definitely very important assets, very big assets that I know we're all thinking about the same joke during the live stream with the racks, but let's keep it professional here. Intel Foundry is, in my opinion, a huge asset with immense potential. I think the client computing group, data center, and AI have also immense potential. The partnerships that they're getting, the strategic investments, I mean, I would be extremely surprised if Intel does not beat the market from here. Now you're going to say, okay, with all that said, so why aren't you buying shares? Again, I have time. I have had a huge performance with my call options. If you remember, 520%. And so I have time. We are now in the earnings season, so I do like to have some cash to play around with. If we do have some overreactions with all of the other companies that I own, I'll probably use that first. And then towards the end of the earnings season, I'll circle back and see what the price is going to be. There is a very high likelihood that I will return into Intel. So all in all, that's about it for me in this video. Share your thoughts down in the comment section below. We'll see each other in the next one. Bye bye.